Today, we're going to take a look at how we can find the perfect entry in our trading. You can already see my trade in the background, and today we're going to discuss it in detail. This is all based on the smart money concept, which I really love to trade and have been using for several years now. That means, with this trade here, you can see I made over $455. And if you like all this, go ahead and leave a like and subscribe for free so you don't miss out on content like this in the future. But before we jump into MetaTrader here, I first need to explain my setup to you in detail. We're on the 1 hour chart here. The first thing we do is, of course, check, okay, what's the trend? Let's zoom out a bit. Yeah, perfect. We're in an uptrend here. New highs have been formed again and again, and everything fits so far. So we're only looking for long trades. That's already very, very important. The next thing we're looking for is a massive move to the upside. We can see that very clearly here. That means we also have an order block down here. That's basically the first point we mark here. So, a nice order block. If you have no idea how to mark order blocks and fair value gaps, feel free to check out one of my recent videos. That's where you'll find the perfect order block. I explained everything really well there. So, order block, fair value gap, and of course, a break of structure here as well. That means we've formed a new high up here. Very nice setup, and then of course we wait for the chart to come back in here so we can trade it long from there. But today, the focus is really on the entry, not the entire setup. Still, I'll explain the whole thing again from start to finish. So, that means we've even reached a completely new high here. And here, a very nice phase, a consolidation phase, boom, boom, boom. The whole thing moved sideways nicely here and then grabbed the liquidity up top before coming down to our entry point, yeah. So these dollar signs here represent liquidity. There's also liquidity below here, and then the whole thing moved down. Let's take a look. Boom, boom, boom. Then the whole thing came down very aggressively here. And as you can see down here, when we get into this area, the question is, okay, how do we open a trade here? Should we even open a trade after such a massive move to the short side? But yes, that works too. Of course, you have to stick to certain rules here. But in general, today we're going to take a look at the entry here. So how did I manage to find the perfect entry here, right? And if you want to start trading now, then go ahead and create an account with Vantage right away. You can trade there, live, demo, everything you need. You'll also get 50% on top of your first deposit. The link for that is in the video description. Feel free to take advantage of it. Low spreads, low fees, everything we need for our gold trading. That means I switched to a smaller time frame here, the 5-minute chart, and we'll take a look at it there. So, let's zoom in a bit here and we can see, okay, this is definitely our order block and above that is the fair value gap. Now we can see, okay, this one candle here already reacted really well to it, yeah. So this candle with the long wick. And then you see this green candle here. That's where I actually took my first entry. So, here and not somewhere down there. Now you might say, yeah, but that's not a perfect entry. And that's absolutely right. But in general, I know that when the survey gap here on the left side, if we just pull it over for a moment, the chart often doesn't completely fill the survey gap and tends to turn around before that, yeah. And if we go back here for a moment and say, okay, these two candles here, this candle with the long wick down and this green candle, yeah, they actually show us a pretty good reaction in this area. So I said, okay, I'll go in here with my first position. Now you might ask, why do you keep saying first position? Yeah, I set up my trade in 2 positions and said, okay, I'll make 2 trades here, or rather, 2 entries, let's say 2 entries, and I decided to risk 0.5% of my capital per entry. And that's basically how I did the whole thing in the end. That means, in total, and this is really important, in total, I risked 1%. Yeah, so for each trade, 0.5%, you have to adjust the stop loss accordingly, of course. But in the end, I had 1 trade here, so that's 0.5% that I had already opened there, yeah. That means, if the chart had already reversed there, the setup would have been done for me as well, and I would have traded the whole thing with a risk of 0.5%, that would have been fine too, and that was basically the first entry. But how can we manage to find an even better entry? And that was actually the second entry now. We'll just leave this one as it is for now. Stop loss, we'll talk about where to put that in a moment. But in general, that was option 1. Now, the chart dropped even further down here, right, so it went deeper into the order block. Now you could say, okay, then I'll just start from the middle of the order block and open my second position right there. That's one way to do it. But I waited a bit longer here. I said, well, if it goes up from there, I don't really care. But it dropped a bit further down. I still didn't enter the trade there. I kept waiting because of course it could just keep dropping straight down, especially when you see these bearish candles and how aggressively it came down here. Yeah, you have to be careful not to open a second position too early. And what I also want to tell you is, please don't try what I'm explaining here if you're a beginner, okay? This really isn't suitable for beginners. You could end up blowing your account pretty quickly that way. So let's take a look at the second entry now. Then the whole thing dropped down here, and at that point I said, oh, okay, the order block was completely taken out down here, yeah, to the downside. So, let's take a look to the left side. What is the order block doing? Because we actually have liquidity underneath here, right? People who are long here have their stop losses just below, so right in this area. And so, those people were now out of the trade. That means, from this point on, I switch to a smaller time frame, the 1 minute chart, and see how the chart reacts to check if I can find a second entry there, yeah. And here we can already see a very nice candle. This is a typical doji candle here, which held the price there for a minute, yeah. The 1 minute chart isn't really, I'd say, meaningful, but it was enough for me to say, okay, maybe that fits so far. That means I took my second 0.5% completely right up here above. Yeah, exactly, right above there. Draw. So, and after that, the chart came up here and we had a great entry in this area. That means, at the moment we have this wick up here and this wick down here. You know, we can also mark the whole thing up here again. So, now we've had 2 entries here in this area, yeah. Now, of course, the question is, okay, let's talk about the stop loss first, yeah, because it's really, really important to calculate it based on the stop loss. For my stop loss, of course, we have to go back to the 1 hour chart, and in the 1 hour chart, we look to the left side to see where all the liquidity is, right? And down here, underneath this low, that's where we have the most liquidity. Now, that's already really, really far away. That means it's already a pretty big stop loss. You can still do it, but in general, you could also use this one and say, okay, I'll use this low as a reference. In general, it's just important that we somehow secure this area, right? Because it was, of course, stopped out. That means I have either this or that stop loss to choose from here. And of course, you also have to adjust your risk-reward ratio accordingly for a 1-to-1 setup. You can also check if the other one would have been included. And so we have these 2 areas, yeah. It's really, really important to understand that. So now let's quickly adjust our trades, adjust our stop loss, boom, boom. And now we have 2 trades here. You can already see, this one has a very small stop loss, so you could also say, okay, let's rather calculate everything based on this stop loss here, and then it all fits, yeah. And then for a 1-to-1, we of course also have to make sure that everything works here. Here, of course, we have to go significantly higher, right? I think that's clear so far. And with the other setup next to it, it wouldn't be that far at all, right? We would actually already have a 1-to-1 here in this area. You could have let it run here. But since we now have 2 positions here, right, we have 2 times 0.5% that we could let run here now. But now we also have to do it in such a way that we let both positions run up to the take profit of the first position, yeah. That's really important, because together they actually make up my total risk, even if they have slightly different entries. So it's always really important that you map this out for yourself and don't just say, yeah, at the 1-to-1, I'll already exit and that's fine, and yeah, close both positions. But then with the first position, you'd only have that kind of risk reward. And that's not the point, yeah. That's not the point. But I'll explain to you in a moment why I still closed the first trade here, yeah. I'll explain that to you right now. So first, let's take a look at how the whole thing played out here. We're now on the 5-minute chart, and I'll just let it run all the way through. The chart moved up here, then went sideways for a bit, sideways, sideways, sideways. It really took a long time. It took a full 7 hours for this trade to really play out. And then at some point I also said, yeah, at some point we just have to, you know, take profit or take the money out. And if we look here, all right, we're already really high up here, right? You might have seen that in my live stream too, that I closed the trade here in this area at the 1.5 mark and said, this is fine for me, I'm getting out of the trade here. Why did I do that? Well, I've been in that trade for 7 hours by then, and at some point I just want to take profit. And you can also see here why that was a good idea, because the chart really dropped down afterwards, right? So it didn't even reach the maximum take profit up there. After that, it really tanked and, yeah, dropped down quite a bit. That means those 7 hours were definitely good from a risk management perspective. And now let's take another look at the whole thing in MetaTrader, but I think it's clear so far. So, to sum it up again, I made 2 entries. The first entry was 0.5% right at the order block or at the farewell gap, where the first price action was already moving on. Because sometimes it happens that it turns around exactly there, so I thought, okay, I'll split my position into two different parts, 0.5% and 0.5%, and enter the trade there already, you know. That's just how it's done. You can do it that way. The important thing is that the total risk up to the stop loss, up to the maximum stop loss, is 1% risk for both positions combined. That means, in the worst case, we lose 1% risk. That's really important. Don't go thinking, oh yeah, I'll just open another position here and another one there, and in the end, your whole account is gone because you just stacked 5 positions down and said, yeah, I really wanted to risk 5% or something. You know what I mean? That's why it's really important to calculate it so that you really only risk a maximum of 1% there, if you say you definitely want to go into this position with 1%. So, let's take another quick look in MetaTrader, and here you can see the whole thing really well again. Yeah, these blue arrows here are my entries and these red ones are my exits, so basically my take profit. So, as you can see, I ended up taking out the first one again. Why did I do that? Simply to take the risk off the table again, yeah. So at first, I was pretty sure the trade would work out great, you know, really great, and maybe even with the first position it would go long here. That didn't work out in this case. It immediately went short, ran straight into drawdown down here. And yeah, then I realized, okay, but I had already planned the whole thing beforehand with 2 different entries and low risk, so I went in again down there and said, okay, this is my position now and I'll just wait and see what happens. And then the whole thing really took about an hour here until the first, well, trade up here was actually in profit again. So I said, it was briefly in profit. You can see it down here on the right as well, $40 in profit. I said, all right, let's just take that already. What we have, and that's all good. And we can just let the other trade run easily, because as you can see down here, that was really a very nice sniper entry. Now you might say, okay, then just always do it like that with the sniper entry. Yeah, of course you can do that, and that's basically the point of this video. That means, if you really want to have such a great entry, try getting in where most people get stopped out, yeah. So, in the order blocks, that's usually where people's liquidity gets taken out at the bottom. That means, where they get stopped out, you can generally choose your entry point, yeah. And then you really have some awesome, I'd say, sniper entries here and can use all of this perfectly for your trading. Of course, it's not always like this by default. It would be nice if it were always this easy. But in general, it's just great that I managed to catch a trade like this for once. Believe me, that doesn't happen to me very often either. Most of the time, I get in right at the order block and not this high up here. So, this whole position here is also quite special, but I really wanted to take this trade, and of course I covered everything with risk management and entered the trade that way. So you see, things don't always have to be perfect. You just need a strategy and a plan behind it, right? It doesn't always have to be the perfect entry. I split the whole thing into 2, and that way I actually did end up finding the perfect entry, but yeah, I took the risk back out again because I said, no, come on, it's just not worth that much risk to me. And you can see why. After that, the whole thing kept going down, but that was kind of predictable because it dropped really sharply here, and this was basically just a little, well, let's call it a correction phase upwards, and then it crashed right back down again. And yeah, a 7-hour trade, you have to be able to stick that out first. Most people out there will say, oh shit, 7 hours, that's way too much, I could never handle that. Believe me, the longer you do this, the more relaxed you'll get, and then you'll be able to handle things like that, and you'll even be able to handle not closing your first trade at break even, but actually with a small profit. And then you can say, all right, I've taken the risk off the table again, and now I'm basically only running at 0.5% risk, so everything's chill. It's also important to know that even here, after I closed out the first position, I didn't even set the trade down here to break even, okay? I didn't do that. Why not? Because I never do that. I let my trade run completely. It has to go at least 1-to-1, and then I take the take profit and I'm done with the session, so to speak, and with my trading day, and that's it for me. Either take profit or stop loss. Break even is something I do in very, very rare cases. So, in the end, that was my trade year. That means a totally relaxed 1-hour order block. You can see it down here, and if you want to pick the perfect entry, as I said, you wait for the people on the left to get stopped out down below, and then you can theoretically choose your entry down there. Otherwise, in general, smart money concepts should look completely familiar to you here. If not, then of course you're welcome to check out my channel. There are also a lot of smart money concept videos there. Feel free to leave a like and a free subscription, or if you want to learn all of this now, then come join us here in the VIP. We now have over 100 active members, and that's where you'll learn everything. So VIP members, feel free to join. Or if you say, no, I want coaching with me personally, then we'll learn together on Tuesdays and Thursdays, and I'll teach you everything, how to find things like this, how you can learn it, how you can become a smart money concept trader in the end, or even in your regular trading. Of course, I'll help you completely as well. So if you're interested, feel free to join. Link is in the video description. And if you want to get started with trading right now, I recommend Vantage here, one of the best brokers. I've been with them for over 3 years now. They've been around for 15 years, and you even get a 50% deposit bonus on your first deposit. So take advantage of that. If you deposit $1,000 there, you'll get an extra $500 on top. Low spreads, low fees, everything we need for trading. So feel free to create an account. The link is in the video description. That means we're done for today. I hope you enjoyed it. As I said, feel free to leave a like and subscribe for free, and I'd say we'll see each other in the next video. Until then, take care. Bye-bye.